Hi, I'm Trevor Austin, founder of Authentic Life Financial Planning. In this video, we're diving into NSO tax filing mistakes. The number one mistake that I see with non-qualified stock options is double counting your income. So what happens is that when you exercise NSOs, the bargain element, again, just the difference between the fair market value and the exercise price, that value is included as compensation income for the year. In general, that should be reported on your W-2, and then the new cost basis for those shares should be the fair market value on the date of exercise. The problem is that most custodians do not properly track and report the cost basis on stock option exercises. So as an example, if you exercise and sell all in the same day, what may end up happening is that your W-2 will report the bargain element and report the compensation income, but the custodian, so where your shares are held, will also report the sale, but they'll report the basis as either your exercise price, or they may report it as zero, and you end up double counting your income and paying a whole lot more tax than what you should be in reality. There's kind of two ways to fix it. One is that some custodians will share a supplemental 1099 that's reporting the correct basis on those shares. Unfortunately, not all custodians do this, even though they're supposed to. And so if you don't get a supplemental 1099, or if you don't get a corrected 1099 from that custodian, you'll have to review your W-2 as well as your final page stub for the year. You'll have to make sure that they are accurate, that they look the same, that you have the same amount of taxable income on your W-2 as you do for your final paycheck. And then you'll also need to review the Schedule D on the 1040. That is the capital gains and losses form. So you'll need to make sure that the basis is being reported correctly. Another place to look would be the 1099 if the regular 1099, to make sure that that is getting reported correctly. So let's look at an example. We're using May again. So May is an employee of XYZ tech company. She received NSOs, non-qualified stock options, when she first started in 2020, and she exercised and sold her shares on the same day in like a cashless exercise in 2024. So she had 5,000 shares that she exercised. The exercise or strike price was $50 per share, and the fair market value at exercise and on sale was $70 per share. So the bargain element for this exercise is $100,000, which is just the number of shares times the difference between the fair market value and the exercise price. So $100,000 should be included on her W-2 as compensation income for the year. And then on her Schedule D, there should not be a capital gain. Again, in this case, we're assuming she exercises and sells on the same day, so the fair market value should not be any different. So there should be no capital gain reported. The 1099 should show a fair market value, or excuse me, a cost basis per share for this sale, excuse me, as $70 per share, not as $50 per share, or not as zero. Again, most custodians don't do a good job of that in my experience. Some do. Some will have the supplemental 1099 showing the correct information, but many don't. And so you do need to be aware of this, because the last thing you want to do is pay tax on $100,000 of income and then pay long-term capital gains tax on top of that when it really should be zero. Just as a quick rough example on, for this client, that's probably a $15,000 difference in taxes at least if, the custodian is reporting it correctly, or not even correctly, but as, the better option of the basis being $50 per share rather than what it actually is, which is $70 per share. It could be even worse if they report it as zero. So it is a significant significant thing to pay attention to. If you have an NSO exercise and sale, you absolutely need to make sure that you are reporting it correctly and that you're not overpaying your taxes. Because that's, yeah, you shouldn't pay any more taxes than you need to, than you're supposed to. We're not we're not trying to evade taxes. We're just trying to make sure we're paying the correct amount of taxes. Thanks for watching. If you found this video helpful, please like, subscribe, and drop a comment below with any questions or topics that you would like to see covered. Financial planning is all about creating the life you want. Let's build it together.